How you doing, everybody? This is Kurt Henry at the Mortgage Center with my dad Randy, and we are mortgage brokers. Our job is basically that we work with multiple banks and lenders to get them to compete for our clients, and there's no cost at all for our service in most cases because it's the bank that pays us at the end. So this is a weekly mortgage update just to let you know what's going on in the mortgage market. In terms of mortgage rates, a 5-year fixed rate is in around 3.04%. Could be a little bit higher or lower just depending on the situation. And a variable rate is around 2.65%. That would be prime minus 0.35, and that again could be a little bit lower or higher depending on the situation. I also wanted to share with you, I was at a conference a few days ago, and there was some discussion with one of the vice presidents of Scotiabank on the mortgage side and one of the leading economists of CIBC, and they were having the discussion about ING. Now, as you may know, ING Direct has stopped doing mortgages through the broker channel because ING was bought by Scotiabank back in August. Now, this isn't really much surprise from the mortgage broker standpoint, because this is what Scotiabank tends to do is they will buy a lender or a trust company, and that company will basically be rolled into Scotiabank. The reason for that is because when Scotiabank buys ING, for example, you then have one lender that have two of everything, so two different departments for every function. So then the conversation went with the Scotiabank vice president and the CIBC economist that really the reason for Scotiabank deciding not to do mortgages through the ING Direct channel anymore is because of inefficiencies, because there's no reason to have two departments of everything when you have one lender that owns both, say, Scotiabank and ING. So that was an interesting discussion. Also, in terms of mortgage rates, a rate forecast from the CIBC economist, it was Avery Schenfeld. He's one of the leading economists for CIBC, and he had mentioned that they're expecting 1.5% growth in Canada on the economy for 2013, and then around 2.5% growth in 2014. So why that's important is because it normally means that rates will start to increase into 2014. That would be the variable mortgage rates. In terms of fixed rates, he had mentioned that he wouldn't be surprised if the fixed rates were about 0.5% higher or so by the end of 2013 compared to where they're at now. So if you have any questions on that, feel free to give us a call. The number at the office here is 905-436-8010. Thanks, and have a great day.